Now, OPEC Plus, Wednesday meeting in Vienna. First time they're meeting in person for 2 years. We're expecting 1 million barrels a day as a cut. But you're saying that ultimately will not really disturb this supply dynamic. Give us a sense of your joined-up thinking on that.
Well, 1 million barrels per day cut effectively means about 300 and 350,000 barrels per day cut, because so many of the OPEC countries cannot meet their quotas. So you give them a number, they can't really cut. They already they don't have the volume. So I think OPEC needs about 500,000 barrels per day plus real cuts, which means that either the cut has to be about 1.5 million barrels per day, or is 1 million barrels per day plus Saudi Arabia and or UAE cut separately on their own on a voluntary basis. So you give a 500,000 barrels per day cut, then it gives you sort of a flat price of about $90 for the rest of the year.
So, Dr. Fesharaki, then, what price do you think they're trying to protect? Well, that's one part of the question. And what effectively do you think they will need to announce to protect that price?
I think if they don't do anything, the prices will slide to $80 and lower. The market is bearish. A lot of it is just sentiment because of the worries about the future recession, and also worries about when the China lockdown stops. So they have to do something. They have no choice. They want to protect something which is above $90 flat price. And to do that, they need to have a real cut of 500,000 barrels per day or more. Have a real cut of that, as I mentioned. Either you have to cut 1.5 nominal to have a real cut of 500,000, or you have to cut 1 million plus some voluntary cutbacks of maybe 250,000 by Saudi Arabia on top of that. That would then protect the price at about $90 range, which is what they're looking for.
Timing here as well, Dr. Fesharaki. I think it was back in April you were suggesting that the price for oil this year should be about $70 a barrel. Now, of course, it's been much higher than that. Have your forecasts also changed?
No, the forecasts haven't changed. It is the circumstances of OPEC trying to protect the price, the problems in Russia, the tensions, the worries about the market. But I think that the issues of whether we're going to have a big recession or not is on the minds of everybody. A big recession can lose us 2 to 3 million barrels per day of demand, and that could reduce the prices significantly. Are we going to have a big recession? Well, everybody's guess is as good as mine. I think we can still avoid it, but that fear is on the market all the time, bearing on it.
I want to talk about what you're seeing as far as demand is concerned, because this year we have a strong dollar. So, I mean, Brent at 88 this year is a lot more expensive for many importers than Brent at 88 in previous years. Are you seeing incrementally slower demand because of the stronger U.S. dollar?
Oh, absolutely. The demand destruction is there because of the strength of the U.S. dollar, and because the flat prices are higher than the market is used to. So, yes, I think we're looking at several 100,000 barrels per day of demand destruction in front of us, and that really impacts the total market demand.
Yeah, and I want to get a sense of where we are with these talks with Iran. I mean, Iran's a huge player when it is playing. You know, could that change the game if they finally do a deal, and are they likely to?
Well, they can't do a deal until the U.S. elections, and if either the House or the Senate is lost to the Republicans, then it's off. It's not going to happen. So the chances are very limited at the moment. I think the Iranians missed the boat by insisting on demands which could not be met. And if they're going to do something, it's going to be end of the year or early next year. And that is if the Democrats still control both houses.